Forex Focus brought to you by IG. Big extremes that we're seeing here in the Japanese yen of late, and a lot of people wondering if, out of the major economies, and I don't want to, talk down anyone, but by GDP, the major economies are the US, UK, Eurozone, and Japan. Japanese has definitely been the weaker in recent years, and now it's getting to the point where the question will become, is Japan just falling out of that grouping completely? And is the yen on its way to complete collapse? Because we're right there, right back at those extremes that we saw in 2022 for US dollar over yen, or yen under US dollar, depending on how you're looking at it. But here you can see we got up to 150 here in dollar yen, the highs going back to 1998. And even prior to that, prior to what we have data for here, essentially looking at about 30 years of data, made the high here, the low in Japanese yen. And it looked like at the end of last year and start of 2023 here that yen was maybe catching its footing a little bit, bouncing back. As you see, dollar yen dropped all the way back down to 130. Now trading at 143 again, getting close to 145. Huge moves here for major economy currencies like the US dollar and the euro against the yen. As you're seeing, it's not just a dollar yen story like it was last year. We're actually through highs for last year and the last several years for euro yen, which is a major forex market. And this is a high since 2008 as we near 160, and the high in this market just shy of 170. And even a day like today, the major forex pairs against US dollar, euro is moving higher against dollar and yen is moving lower against dollar. So this is really transcending US dollar stories and becoming just essentially a Japanese yen story, or a major economy versus Japanese yen story, because it's also not just the euro yen, it's pound yen as well. New highs right now since 2015, and getting ready to challenge those potentially here, as those highs just shy of 200, and now we're trading right around 183 and change. And those are the first times, this is the first time, that we would be getting close to that price since Brexit obviously moved the British pound lower against a host of different currencies, Japanese yen included. But this is all to say huge price extremes that we're seeing. And why might we be seeing such extremes? Well, before we get to that, and I'm sure you might know the answer, a lot of traders on the other side of this extreme, so to speak, thinking that yen will catch its footing. 70% of forex traders at IG going against this 25-year extreme. They're short dollar, long yen, thinking that this will revert lower here, going contrarian, so to speak. And you talk about mean reversion in forex markets, and just look at the last 30 years of trading here. And these forex markets and interest rate markets and commodity markets alike will tend to see different price extremes and revert to a more average price. But of course, this market can trend in whatever direction. And if the Japanese economy is going to underperform these other major economies and stay underperforming like it has, then this market can move to a new mean, so to speak, a new average closer to 150 or 160. But traders on the side that it will revert back to the old average closer to 110, 120, and 130 at least here. And the same goes for at IG. The client sentiment as of today is above 70% on the short side of euro yen and on the short side of pound yen as well. So the majority of traders going against this extreme, thinking there will be a reversion to what has been normal historically. Of course, this market can continue. I mean, you look at that dollar yen, it was higher just last year, but we'll see what happens. Of course, the reasoning for this, at least part of the reasoning, is not only the poor economic data, relatively speaking, that Japan is seeing compared to the Euro area, UK and US, but also the interest rate divergences that we've seen as the US at 5.25%, UK at 5%, Eurozone at 4%, and Japan not only at negative 10 basis points, but Bank of Japan saying that they don't want to move that anytime soon. Now, if that continues, and that's why we're seeing some of these extremes, is not only has the divergence between interest rates widened, but central bankers in the Eurozone and in the UK and in the US all talking about how they might hike at least, another 25, 50 basis points and beyond. And so moving in different directions here. But if that does turn, if Japan either picks it up or these other major economies turn around, you might see some relief for that Japanese yen. But as of right now, not looking good in the potential territory of a collapse for that yen if these interest rate differences continue to diverge and that currency continues to move to not only 10, 20, 30-year extremes, but potentially new extremes that we don't even have data for this Japanese yen.